What is a CFD? Now, a CFD stands for contract for deed. Now, it's a note. It's a type of note that's a little bit different structured basis than your traditional first lien or second liens. Usually, note investors are buying a first lien where the property is in the name of the buyers. Like if I have a house, I would go out and get a bank to finance the purchase of the house, and the deed of trust is in my name, right? And the mortgage is in the bank's name, all right? And that's recorded at the county. Well, over the last 10, 15 years, when we had all these low balance properties that went to foreclosure, and you had government agencies like Fannie and Freddie that had all these low, under $100,000 balance properties, you had companies that came in and bought, tens of thousands of these lower properties. They didn't want to put a mortgage on the property because they didn't want to go through the extensive process of foreclosing. Now, foreclosing on a note can vary on a state-by-state basis. It may be as fast as 21 days here in Texas to 3 years in New York, and obviously it's a bit of a cost to foreclose. So what a lot of these funds did, like Harbor and Window Rock and other companies that bought a lot of these lower balance REOs, is they offered financing. But what they did is in term of a contract for deed, or a land contract, it's called in other places, where the deed stays in the name of the seller. There is a mortgage that's written in. It's usually a 30-year mortgage at a roughly 9.9% interest. The borrowers aren't really jumping through credit qualification. The seller's willing to carry the note for 30 years. But there's usually, what's great about a contract for deed is some states evaluate it as a tenant relationship versus a borrower relationship. So some states would allow you to evict if the borrower does not pay. The deed's still in the seller's name. So we bought a lot of contract for deeds from Harbor Portfolio. So when we bought these contract for deeds, there was a deed, a quitclaim deed that was recorded transferring ownership to us. The borrowers still were in the properties, paying on the mortgage. The deed was in the deed of trust. The property was still in our entity name, but the borrower was on file with this contract for deed that was filed at the county. Now, depending on the state it was in, like I'll give you a great example. In Indiana, you can evict very quickly in Indiana versus having to go through a longer foreclosure process of 6 to 9 months. You could evict roughly in 30 days because they treat as a tenant. Some states like Florida evaluate contract for deeds like a mortgage. So you still have to go through a foreclosure process in Florida. Now, contract for deeds are very common on properties below 100,000. Most banks do not want to give a loan, don't want to go through the process of jumping through the hoops to originate a loan with a balance of less than 100,000. They just can't really make any money. So that's why contract for deeds are very popular with REITs or investment companies that have bought a lot of low value assets that they're willing to carry financing and then either sell that note off or hold it for cash flow. They're a first lien contract for deeds, usually a first lien. And you still have an assignment of the interest in it. You still have an AOM or an allowance is recorded along with it, but you have an assignment of the interest, and then notice what's transferred it. The deed of trust, there's a deed of trust that's filed versus an AOM at the county this way. And one of the things you have to be careful of is if you do buy contract for deeds, you want to make dang sure you order an O&E report, an ownership and encumbrance reports, to make sure that the contract for deed that's filed to the county matches up with what you're buying here. We have seen in the past where a lender like Harbor originated a contract for deed, but the borrower didn't pay. They evicted. They filed the first contract for deed, but never got a cancellation filed to allow them to go out, so that the paperwork I have on the loan that I'm buying on does not match up with the county contract for deed. So then what you'd have to do at that point is go get that first one canceled, reach out to that borrower, have them sign a cancellation, then re-record the new CFD that you are purchasing. It's not a deal breaker. Oftentimes contract for deeds sell cheaper than your traditional first lien, often because of the lower credit scores. Most of these borrowers aren't putting $500 to $1,500 down. They're not usually putting a big down payment down. It's not credit based, so you'll see low credit scores on these. What many of these funds did that were selling contract for deeds or selling properties, they were offering, hey, get in $1,500 down, $400 a month, and you can own versus renting. They've been a great investment. Still got great people in it. It's just a little bit lower value property. And like I said, you want to make sure and be careful of where you're buying these notes at. Some states Like Michigan, for example, if a borrower brings 25% on a down payment on a contract for deed, it can't evict. You would have to go through a foreclosure process. So I'll give you some examples. Let's say it's a $50,000 sale. If a borrower brought $12,500 to the table, or 25% of the purchase price, I would not be able to evict. I'd have to go through a foreclosure process in Michigan. Otherwise, if they only brought like $1,000 down, it's a tenant relationship and I can evict in 30 days versus having to go through the foreclosure process. So each state's a little bit different. You want to definitely check with your real estate attorney or servicing company when buying these to find out how long the process is, and go from there. But they've been a great investment over the last few years, as we saw thousands of these things pop up. And what's been great also is, as values have increased across the country, the equity position of the borrowers has also increased, which means you've got people wanting to stay in their homes. And we've seen modifications or reinstatements or trial payment plans start to increase on the contract for deeds as people want to stay and they don't want to miss out on this equity that they've created from just staying there and being good borrowers. So great people, just a little bit lower balance stuff when it comes to as far as values of the properties, but they can be good investments. And that's your term of the day today. Contract for deed, or another place they call it, is a land contract.